Hi guys, good morning. This is Ray from Next Forex Trade, and today is the Monday the 29th of July 2019, and I'm just going to kick straight off today with what I'm seeing in the markets. There were some other opportunities that did occur in the market. It was a bit late on to the party on those though, because they've already moved off, but I have seen this setup that I'm taking on the EURJPY. It's an okay setup. Not amazing, but still tradable. So I already have entered the position. The premise is always we're looking at the daily first of all. We've got a downtrend with lower lows and lower highs. We've seen this most recent move here within the standard deviation channel. It's kind of near the average of this standard deviation channel around the price. It is not as much as overbought as you may have seen in some of the other videos. So in the other videos, typically the position I've taken has been a lower high that's been interacting with this upper channel of the standard deviation channel. Now in this instance, it's nearer the average of the standard deviation, which is still okay. It's still what I look for is basically for some context if in a downtrend above the average, right? So but in this upper channel here rather than the lower, if it enters this lower portion of the standard deviation, then it for me it's just showing that it's a bit too oversold. The best timing, the best positioning is when it's interacting up here. We've seen some reversals up here along this upper edge, but it's still tradable if there's context near the average here. Now we've seen also that there have been some soft type of levels of resistance with Friday's candle, where it's interacted with this previous support here, these kind of levels as well. Let's see how far back that goes. Some interactions around here. They're quite soft. They're not ideal reversal areas, but it's definitely zonal, giving some context for the trade. So having assessed what the daily was doing, I did go to the lower time frames, and on the 4 hourly, what I've captured here in this standard deviation is I would assume it's this move here that we're seeing, so this kind of extension that we've seen in the daily. So again, looking for value for money on the 4 hourly, and what I saw with this was the price again, it's making lower lows, lower highs. This previous lower high is given context for I've put the stop loss, so it's outside of our standard deviation, giving a clear indication of where I'd be wrong, and it's also above our previous lower high, and above this, or kind of above this zonal resistance that we're seeing as well. So the stop placement makes sense in this instance, based on what the daily and the 4 hourly are saying. My one-to-one profit target is before this previous lower low, which in my opinion is generally better, because as the price approaches the previous lower lows, it does have a tendency to reverse, or break or reverse. So as it comes down, it has a tendency to find support around this level where we've seen this lowest low so far. So it will the overall still bearish that the price could break through and make lower lows still. But if you look at these previous lower lows that we're seeing here, that's what happens. So the price has come down, it's interacted. Let's blow that up a bit. As the prices approach the low, it comes down, interacts a bit, pulls away, and then breaks. Now, obviously, if you're in this for a longer time, then that's not so much of an issue. If you're overall bearish on this, then it just finding support at the lowest low isn't really an issue. But for me, because my trades are typically less than a couple of days, 1 day ideally, two the most, it means that I want to be out of the market and avoid carrying positions overnight, because that way I can leave myself susceptible to additional risk if it's held over the weekend. And there's also the cost of swaps from day to day. So the swaps are what are charged on holding a position from 1 day into the next. So yeah, let's have a look at the hourly. to see how this stacked up. So much the same story as a 4-hourly, obviously, just more contact points, more granular. We can see that we've got lower highs, lower lows in this move. Now, what I would want to see is it's about midday here. It's just gone midday here in the UK. This may be one that I have to manage if I don't see the price action I want to see. What I'm looking for in the hourly and lower time frames is for the price to continue to break support. So these lows here, I want to see within the next few hours the price to move past these lows. If I were to see the price break these previous lower highs, that would be a warning sign for me, and it's very likely I'll move my stop loss to break even. Why? Because if we're using this most recent move down as well for context, this is a standard deviation around this price move, the most obvious move that we love seeing. Taking out these previous lower highs would also be a breach, if you like, of this standard deviation, giving some indication that we could see some bullishness in the near term. Now, because of the analysis on the daily, you might think, oh right, this is still reasonably good to be bearish on. But for me, if the price action in the lower time frames isn't doing what I want it to do, then I can't force it to do anything. I can only react to what it's done. So if it's telling me that potentially it could be making higher highs and higher lows, then that for me is a warning sign to close out my position at break even. Now I've placed my stop loss high enough so that I've got enough wiggle room in order to do that if the price does start causing me issues in that way. If I'd had a tighter stop, yes, the price would need to move less of a distance to hit my take profit, but it would mean also that I haven't got as much leeway in terms of the price potentially going against me. So this is just one of my risk management approaches, to have enough, firstly, to make sure I'm going with the trend in terms of the trade, to have a stop loss that is above, if in a downtrend, above previous lower highs and out of a resistance zone, and that stop loss should kind of be out of the way of problem areas on all of the time frames. So the 4-hourly, definitely, the hourly at the moment, or lower time frames, fine. The daily it's not perfect. It's above what I'm assuming is a potential lower high, but ideally it would be outside this standard deviation as well. So this is a slightly higher risk in terms of that. So it's not something I would put the full 2% into, but I'm willing to risk 1% with potentially having to manage it as well. If this were to go in favor and start to make lower lows and lower highs, then one thing I may consider doing is pulling down a protective stop. So as if this price starts to move down like this, it's unlikely that it's going to in one extension hit my take profit. It's going to cycle around and do an extension and a retrace, extension and a retrace. What I could do is pull down my stop above each of those lower highs, so that if the price then reverses on me, I've kind of locked in a profit either way. So that's what a protective stop would do for me. What else can I talk about on this? So and yeah, just have a look at so it's useful if you're using MetaTrader as well. You can see here roughly my 1-to-1. When I hover over the price level, the dotted line, you can see you got the profit GBP there in pounds, and then you can see the pip distance. It's they're not exact in terms of 1-to-1. I'm not too bothered about that, as it nears the price level, I'm looking at the smaller time frames anyway to manage the trade. So it's good enough in terms of what I need. What else have we got to see? Okay. Yeah, I'm just trying to think what else can we have a look at. So this is a trade that I've got on for today. Didn't really see anything else in the market that took my fancies. Like I said, so there were some decent setups, but just a bit late to the party, so didn't participate in that. Try and jump on you know, if the price is already moved away like this one here, you know, just let it go. Otherwise you're catching a falling knife. It's already oversold here. This extension here, for me to short now, it's too late. In fact, this is very similar in terms of the setup that we were seeing on the EURJPY, right? We were seeing the daily with lower highs and lower lows. We saw the candle 2 days ago produce that lower high like it is here and interact with potential, you know, previous levels of resistance, softer levels of support here, more resistance here. So it's a similar setup in that, in terms of what the daily was saying. 4 hourly as well. The most recent extension was, so this move here that we're seeing on the daily is this move here on the 4 hourly. Same thing, it was overbought. So had I seen this a bit earlier, my stop loss would have been above this level here on the daily. So put on an alert. So above this lower high based on the daily, sorry, the 4 hourly and the daily as well. And my 1-to-1 would have been around this average here. Yeah, I'd left that one. I think there was another one similar to that. This one here, negotiable as to whether I got into that. But as you can see, it's already stretching away. It's oversold, making it more expensive for me to trade and find good value for money. Same here, GBP JPY, similar to EURJPY, which I'm actually in. Yeah, very, very similar price action on all of the pound crosses today. That was also good. I was stalling because I was trying to remember what I was going to talk about as well. So on the EURJPY, you can see at the moment my take profit is around 61 pips, give or take, and the take stop losses is 61 as well. So when you're going for profit targets, it's definitely worth evaluating how, excuse me, how likely the target you're going for is going to be hit in a period of time. Now, my daily, you'll see often that I have the ATR, the average true range, on there. This tells you on average how far the price moves, and I've got this set to 14 periods. So this is basically the average over the last 14 candles. How many there are? 1, 2, 3, 4, 5, 6, 8, 9, 10, 11, 12, 13, 14, around here, right? So it averages the range from the highest point to the lowest point on each of these candles, kind of adds those all up, and then it averages them to tell you the distance that the price on average will move in any one day. Now it is period based, so obviously if you had it on the ATR on 4 hourly, it's the last 14 candles that are 4 hours. But yeah, for the daily, last 14 days moving average, and you can change that just by clicking on it. You're probably not seeing that box that's popped up for me, but when you click on it, you'll see the box for average true range. You can change the period if you want a longer period. Now the point of this is that this just gives me some indication of how likely my target's going to be hit on a day, because if I'm going for 61 pips, then, and I typically don't want to be in for much longer than a day or two, then the average true range can be a guide to you know, how viable that profit target's going to be hit and in what period of time. So if I've got 61 pips that is going to be my, you know, profit target, I mean, there's a good chance it could be hit today. Obviously, if it was 20 pips or 30 pips, then there's a much higher likelihood, given that the high on this has already, you know, moved a good what's that? That's it's moved about 20 pips on the day. So what I'm saying is, for this price where it is now to come down to my profit target of 60 pips, it would need to move 20 pips. So it would need to move on the day about 75 to 80 pips on the day, which is, you know, quite a bit over the average true range. So that just means that I'm just aware that I may need to take profits early on this if I see signs of reversal on the hourly. If I want to, you know, get out before end of day or not have to worry about carrying the trade. And it's just something to be aware of. So if you set up something that is, say, you know, you're going for, I don't know, you're trying to take advantage of the bigger move for, say, down to these kind of levels. So you're going for about 150 pips and you're expecting that to happen within a day or 2 days. Just use the ATR as a guide to figure out, right, is that really likely to happen? It just helps with your patience with a trade. So if you've become impatient with a trade, you know, well, it's not hitting my profit target, it's not hitting my stop loss. Sometimes it's down to not understanding how long these things can take based on, you know, previous price action. If you've got 150 pip profit target, just, you know, be more patient in terms of that materializing. So yeah, those are some examples of how you can use the ATR to help evaluate, you know, how long a profit target could take to reach and how likely it is as well. But this one's going okay so far. I'll update you in tomorrow's session. And as always, if you've got any questions, feel free to leave them in the comments section below. And yeah, I will see you in the next video. Thanks a lot.